Ladies and gentlemen, this is George Masri, host of the Well Off podcast, and you're listening to a new episode with James Knull. I had to ask him how to pronounce his name because the K is not silent for once. But anyways, James is out of Edmonton, Alberta. He is a real estate investor and realtor out there. He owns over 250 units, and we talked about his multi-unit portfolio, and we covered his criteria. So interestingly enough, he said his number one criteria is location, and he's willing to actually sacrifice a lot of things to get the location that he wants. Number two is size of land or lot size. And then number three, he's turned towards newer properties as opposed to old dilapidated ones that need work like he used to buy when he first started. We covered a lot of things here. We broke down a little bit of the Edmonton market. So if you're interested in investing out there, if you're finding that it's too expensive or it's out of reach to invest in Toronto or in the greater Toronto area, Edmonton might be a good place for you to go, especially if you're into cash flow. So enjoy the episode. Make sure you share it with your friends and family. Put the word out there. Leave us a review wherever you're listening to it. And if you are looking for some free reports, you can go to welloff.ca/report. Download some free stuff. Feel free to connect with me. My contact info is on there as well. And enjoy the episode. Welcome to the Well Off podcast, where the goal is to motivate, inspire, and share success principles. I'm here with James Knull, who is a real estate investor and realtor. He just told me they've got two offices, so out of Edmonton and West Vancouver, if that is correct. So he's been investing and a part of the whole real estate business for about 11 years now as a realtor and 10 years as a specialist in investment properties. He's got 250 plus doors in the Edmonton area. And today we're going to talk to him about multi-units. We're going to talk about all sorts of real estate stuff. So James, welcome. And thank you for joining today.
Hey, thank you so much. It's an absolute pleasure to be part of the podcast, and can't wait to have a great conversation with you about all things real estate.
Sounds good. So I like to start off by asking you about your childhood. Tell me a little bit about where you grew up and one or two things you remember from back then.
Yeah, for sure. I grew up in Edmonton, Alberta, Canada. And, I think one of the most memorable things I remember is both of my parents were school teachers. And so when we had 8 weeks off for summer vacation, so did they. So we were really lucky because we got to go on all kinds of cool family trips and family vacations and traveling and camping in the mountains here in Western Canada, and just lots of outdoorsy stuff every single summer. So that was a really fun part of my upbringing that, I was really fortunate to have.
Cool. So where did your interest in real estate investing come from? Was that something that your parents were dabbling in at some point, or what happened?
My dad owned a few income properties when we were very young, and they ended up selling all their income properties and using the bundle of equity that they got from that to pay off their house free and clear. So that was pretty cool. My parents had a mortgage-free house, which they, which just was a great thing for them. So they didn't really push it in terms of owning multiple properties and building a portfolio. They dabbled a little bit, and then when they had a couple of small wins, they just pooled the cash together. So that was about as far as it got with real estate investing for them. But one of the main ways I got started is I was chatting with my dad about investing and about the future, and he's definitely suggested to me that why don't I just buy a house and rent out the bedrooms to my friends.
Yeah.
And that's what I did. That's kind of how I got started. Is I bought my very own frat house, and it was me and my buddies, and they were paying rent, and it helped pay for the space.
Cool. Yeah, and then from there, I just saw like a quick clip you did. I guess from there you started buying more and more real estate because you noticed how well it was working for you.
That's right. Yeah, I mean the first house was great. The rent from all of the other fellas in the house paid for the cost of me living there, so I was basically living, from my perspective, rent free, and building equity in the house at the same time. So I bought another one, and that kind of snowballed. Back then you could actually buy rental properties with 5% down, so that didn't hurt one bit. And back then the price of property at Edmonton was really low, so putting together the amount of money for a down payment wasn't particularly hard at 5% down. So it enabled me to pick up several houses with basement suites pretty darn quick for a young person.
Yeah, cool. And tell me about your journey into multi-units, because I believe that's kind of one of your specialties, or your specialty today.
Yeah, exactly. So after I accumulated enough single family houses, I kind of thought and felt for myself that the next logical step in my progression as an investor was to go to the quote unquote next level. And I felt the next level was multi-unit residential. So I started learning about it, reading about it, educating myself, chatting with different people who own multifamily. I kind of poked around at it for almost 2 years before I really started taking any serious action, and took the plunge, bought a 12-unit building, and then just kept it going from there.
Cool. So if we fast forward to today, what do most of your properties look like now? Did you sell off the smaller ones, or do you still have those? And what's your ideal property now?
Yeah. I mean, I have picked off some of the initial properties I bought, especially some of the older ones that weren't in the best locations. So I definitely have thinned out the portfolio a little bit to make it easier to manage. But today I'm a little more choosy with the property because I've got a portfolio that I'm happy with. But when a really good deal comes up in a location that I strongly believe in, then I'm willing to act on it. But I'm not aggressively acquiring. I just kind of sit back and enjoy myself. And then when a deal comes up that checks every single one of my check boxes, then I move on it.
You've sold some of your smaller properties, or the ones that weren't in the greatest locations,
Right, yeah.
and you started buying or reinvesting that money into larger properties. So today, what do you look for? Like, what's some of your criteria that's really important in a multi-family property?
Yeah, great question. I mean, I think my number one criteria above all else is location. They always say location, 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 and
Mm-hmm.
the more I get into the industry, the more experienced I get, the more time I spend being involved in real estate, the more I appreciate just how important the right location can be. So, good location. If the property is in a location that I'm really interested in, then that's a good head start. Um, the next thing I'm into is just the size of the piece of land, like lot size. That's an important one for me. On a long timeline, the land is what holds the value. The building is kind of secondary. So I want to make sure that I've got a largish piece of lot and land to work with, so that in the future there might be future opportunities to maximize that lot and land potential. And then I'd probably say that the last criteria, and this is more specific to myself, is I'm leaning a lot more towards newer properties nowadays, ones that don't have a lot of repairs and maintenance, or older properties that have been totally overhauled and renovated. I'm not as interested in nowadays in doing renovation projects or taking on properties that have a ton of outstanding repairs and maintenance or anything like that. I want properties that are fairly turnkey, low headache, low requirement for investment, that sort of thing.
Okay. So it sounds like at this stage you are at a point where you want a safe place to put your money, as opposed to a place where you have to be very active and force appreciation and do that kind of thing.
Yeah, I'd say. I mean, the word I'd probably use is less time consuming.
Yeah.
I want, because we're doing repairs and maintenance or overseeing large renovations or large developments. It's incredibly time consuming. There's a lot more planning that goes into it, a lot more oversight, a lot more checking in, a lot more variables, and all that just translates into more time that the property requires. And at this stage of my investing career, I want things that, while they're going to be lucrative in terms of the returns that they can generate, I'd rather use location and land to drive the value of my appreciation instead of putting in tons of time.
Mm-hmm. Yeah. So the number one criteria you mentioned was the location. Are you willing to overpay for a property to get the location that you want?
I mean, I don't know if I'd ever overpay for a property, but good locations command premium prices. So, in Edmonton, for example, there's certain neighborhoods where the property is literally 2 to 3 times more expensive than other areas because it's a desirable location. So, I will pay a premium to be in a premium location because premium locations hold their value even in market fluctuations, and premium locations appreciate faster. So, it's like would I pay $1,000 a share for a company that is growing versus $1 a share for a company that's stagnant? There's more value in a company that has great fundamentals, even if the share price is more expensive.
Mm-hmm. Yeah, definitely. So can you break down a little bit of what the market looks like right now for you guys? Like what are some of the prices? And which areas do you like? Is it like right in downtown Edmonton or on the outskirts, or just kind of give us some of the
Yeah.
details?
Yeah. So, in terms of market in Edmonton right now, I would say one of the main things that we're observing is that it's been a flat market for about 5 or 6 years. During the time of this recording, so it's late February 2021, we're actually having a really hot spring market. We're seeing some bidding wars for the first time in a long time, and the market segment that's really cooking is the affordable band, and I would describe that as in Edmonton, properties between 350 and 450. So the average house price at Edmonton is just over 400. So that slightly below average affordable price band is where things are going really crazy. In terms of what your money will get you in Edmonton, for $450,000, you can get an older house with a legal secondary suite in a decent neighborhood that's been fully renovated and refurbished. It's $450,000. For the low 500s, you can get a brand new house that has just been newly constructed in a good neighborhood with a legal secondary suite, maybe 1,800 feet above grade, and another 700-800 square foot suite in the basement. In terms of multifamily benchmark pricing, for older walk-up inventory and like B locations, you're looking in the low hundreds per door. 100, 110, 120, depending on location. Just as a couple of benchmarks. Downtown, concrete high-rise, high-end condo inventory will be between 450 to maybe as high as 550 a foot. So as a couple of benchmarks, Edmonton's a lot more affordable than the major metropolitan markets in Canada, which would be Vancouver, Toronto. It's pricing is definitely not at that scale.
Yeah. So what brings people to Edmonton? Is there obviously oil? I would assume oil is one thing, but what are some of the major things that people do there for work?
Totally, totally. Oil's obviously a big industry driver. There's a lot of refineries in Edmonton, and then there's a huge manufacturing sector in Edmonton. So traditionally, the manufacturing sector manufactures equipment for the oil industry. So drill platforms, heavy pipeline equipment, et cetera, et cetera. All of the materials needed to successfully run the oil economy. Now that the oil economy is not as hot as it was, a lot of that infrastructure has been repurposed for other kinds of manufacturing. So still a huge industrial manufacturing complex, but all kinds of diversity in manufacturing has happened in the last 5 years in Edmonton as that infrastructure has been sitting dormant, not being used for oil. The other major industry in Edmonton is actually just government. Edmonton is the government center for the province of Alberta. So there's, between Alberta Health Services and the actual provincial government, there's well over 100,000 jobs in that sector, as well. We're the university center. So the University of Alberta has about 50,000 students and staff, which, again, those activities are kind of independent of the economy. So between government and university, about 20% of our population gets tied up in those two major drivers. The greater Edmonton area only has about 1 million people. So when you consider that 200,000 are government / university, that's a huge segment of our population that isn't as affected by by market forces.
Understood. Yeah. There's. I was just surprised because you said the oil industry or the market, sorry, has been flat for the last 5 years or so. So it's kind of surprising because oil prices were quite high prior to COVID. So I'm not sure. Why do you think the market was flat during that time period?
We were at the beginning of 2020. The market was really heating up. It was actually a huge wave of optimism here in the province because for the first time in about 5 years, oil was strong, the market was clipping along, values seemed to be increasing, and then COVID just kind of pumped the brakes on everything. So I think that might be why we're seeing a bit of a market resurgence right now. It's that momentum and that market, that upward pressure on the market kind of seems like it just got delayed by 12 months. So there's a lot going on right now, and it'd be cool to see it continue because it's the first really hot spring market we've seen here probably in about 5 or 6 years.
Nice. So are you finding that there are a lot of investors from abroad that are coming? And by abroad, I mean Toronto, Vancouver, whatever, other provinces and whatnot?
Absolutely, yeah. I mean, we're a very, very popular spot for Vancouver investors because it's a different value proposition. In Vancouver, it's all about equity growth. In Vancouver, you're going to buy something, it might cash flow negatively, but because the market pressure is upwards, there's equity growth to be had in Vancouver. Um, in Edmonton, it's more about the cash flow. Like the ratio of building price to available rent is slanted in the direction of cash flow. So it's a great place to own buy and hold style rental properties.
Mm-hmm.
And, people from Vancouver who want to diversify their portfolio to have cash flowing assets really like buying in Edmonton because, in Edmonton, you can use a line of credit for your down payment and the rents are still high enough to service the debt on the mortgage and the line of credit. So,
Nice.
for people with a lot of equity in their homes in those major markets, it's easy to, pull $100,000 out and buy a cash flowing property in Edmonton and basically get, cash flow without any actual cash invested.
Yeah. We touched on what your money can buy you in Edmonton. So you said 350 to 450 is like the range of affordable homes right now.
Mm-hmm.
And 450 gets you a property with a legal second suite. 500 gets you a brand new property with a legal second suite. What would be some of the rents if we cover these examples here of the different properties you mentioned?
Yeah, for an older refurbished home, including utilities, so that would be your electricity, water, and heating. Um, for a $450,000 refurbished older home, you'd be looking at about 16 to 1650 upstairs and about 1200 to 1250 downstairs. For the brand new house, you'd be in the neighborhood of about 2000 to 2100 upstairs, and the downstairs would probably be about the same. Actually, it'd be about that 1200 to 1300 range, with utilities included.
Interesting. Those are actually really good numbers. Like that's pretty comparable to what you would get on the outskirts of Toronto.
Yeah, they're very strong rental numbers when you compare them as a ratio to the actual home price. So, as an index, it's great for cash flow.
Nice. Yeah, those are awesome numbers. What about your multi-units? So if you're talking about a 20 unit building, what are the rents there for what you said the price per door was about 100, I think you
Yeah,
said? 100 to
120,
120?
depending on the specific building.
Yep.
So I think one thing you'll notice is like our cap rates are around 4.5 to 5 for really nice newer A inventory, and then the C inventory will be in the 6ish range. B will be somewhere in the middle.
Mm-hmm.
So for 20 unit walk up building, say 50 years old, in a B neighborhood, a 2-bedroom, 1-bathroom apartment will fetch you around $1,000 to $1,100 depending on the condition, maybe even up to $1,150 if it's really nicely renovated, and then the ones will get $950 to $1,000, with the bachelors getting around $800 to $850.
Yeah, those are actually very, very comparable to buildings in, again, outskirts, like in the Niagara region.
Mm-hmm.
Those are probably very similar to the rents that we would get out there. Would you say that there are more tenants in Edmonton or more homeowners?
I'd say, and I'd have to do the research to get a specific number, but I'd say at least 35% tenant to 40% tenant occupancy.
Yeah.
The thing about Edmonton is there's a lot of new Canadians, a lot of new Albertans, because Edmonton's such a labor-centric market, manufacturing and construction being a huge part of our economy. There's a lot of jobs available that don't require high levels of specific education or high levels of English proficiency. Yeah. So it's a very popular spot for people who want to come make a really great living, because you can get employment in the manufacturing sector in the $20 to $30 per hour range, but then your rent is low, your cost of living is low. It's a great place to be for people for whom that makes a lot of sense.
Yeah, for sure. So what are some of the requirements for somebody who's like, let's say out of Toronto, who's looking to invest in Edmonton? what would they have to do? Is it just a standard procedure there? Or is there, like, I know obviously this isn't necessarily your specialty, but just from what you know.
Well, yeah, I mean, I would say it actually is our specialty. Like we're in a conversation here speaking investor to investor, but I'm a realtor. I own a real estate firm. We have a ton of realtors on our team, and most of our client base are investors who are buying, a lot of Vancouver. I find that the Toronto crowd ends up, going out to like the Hamilton area, Niagara region, because the numbers in that neck of the woods are similar to Edmonton, but in Vancouver they don't really have the closest equivalent market for cash flow is Edmonton. Right. So the Vancouver crowd really likes investing in Edmonton for those numbers. And what you need is a good team. You want to have local property management, contracting, legal, etc., like all the stuff. And you need to obviously get a mortgage, but mortgage brokers can work Canada-wide. So if you have a local mortgage broker who you really prefer, you can keep working with them to get your approval. And then just have a strategy for shopping. I'm kind of old school. I don't necessarily recommend people buy property sight unseen. But that being said, we sold several properties sight unseen to Vancouver investors using FaceTime and whatever over the year last year. So some people they're happy doing their research remotely, and with new technology it makes it very easy to do that. Some people want to come drive around the city, physically see the properties, that sort of thing. So just planning a strategy to do the due diligence that you need to do to feel comfortable with the new market, that's going to be an important part of buying in a new city as well. Now, the cool thing about buying in Alberta that, is a bit of the old school Alberta advantage is a couple of things we don't have. We don't have land transfer tax. So I know that's a big one in BC, and I believe in Ontario as well. There's no land transfer tax at all. So if you do a transaction, the only fees that really apply are legal transaction fees. Another thing we do not have is PST or HST. It's just GST. So that makes it really easy to do business because everything you pay for, from the cost of your legal fees, the cost of your utilities, the cost of a handyman, the cost of a property manager, everything only has 5% tax instead of 10 to 15% tax, depending on what the HST, PST situation is, which is also great. Another thing that makes it really easy to do business here is our landlord-tenant laws are a lot less regulated. So evictions are easier. There's no mandatory pet policies like there are in some markets. There's no mandatory smoking policies like there are in some restaurants. If there's no rental raise restrictions, so you can raise your rent by whatever the market will bear. So just even landlording from another province, there's a lot more protections for the landlords, because if somebody isn't paying rent, I know in some provinces people can hang around in an apartment not paying rent for months and months and months and months, and it just turns into an absolute nightmare for the landlord. But in Alberta, if somebody refuses to pay rent, it's very easy to get them out within a month or two.
Interesting. I was actually just going to ask you about that. So what does that process look like? Let's say the first of the month comes around and the tenant hasn't paid. What do you do then? Are you able to start the eviction process the following day?
That's a great question. It's a great question. So I would say that the process that you would follow, if you wanted to do it right, a lot of people will put a 14-day eviction notice on the door, but that's not actually enforceable if push comes to shove. So the process would be on the 2nd, you would submit a notice for hearing online. You used to have to do it in person, but with COVID, now we can submit our hearings online. So you submit your hearing online, you get your paperwork all sorted, and then you post it or hand deliver it, you serve it to the tenant. It takes anywhere from 3 to 6 weeks to get a hearing scheduled, depending on how backed up they are. There's only a certain number of hearing officers, so that's a pinch point in the process. If you go to your hearing and the tenant has not paid their rent at the time of the hearing, then typically what happens is, as the landlord, you're given the option of either getting possession of the property back or allowing the tenant to have a payment plan. So, if the tenant hasn't paid, it's pretty much an open and shut case. If the tenant is partially paid or they have paid, then typically there's a payment plan. That's kind of their one strike. And then if they miss the payment plan, then it's an automatic eviction.
Cool.
But assuming they haven't paid, you get your court order to get them out. They have a few days to collect their things and move on. And then if they refuse to leave the premises, you can hire a bailiff who can enact the court-ordered eviction. And if the tenants are extra super ratty, that the bailiff will enlist the help of the police to escort them off the premises.
Yeah. And does that take a while sometimes to get that sorted? Because for us, our procedure is to involve the sheriff. The sheriff would come to the property and force the tenants out if it comes to that. But that can also take a few weeks to have the sheriff booked. So yeah.
Right. Yeah. So most of there are a ton of companies that do bailiff services, or as you guys call them, sheriff services. So
yeah,
I've never seen getting a sheriff take more than a couple of days.
Okay.
But again, in times of high demand, it slows things down a little bit, but typically it's pretty darn quick. So if the system isn't too backed up, it is feasible to start the process on the 2nd of the month and have the tenants out by the end of the month.
Cool. That's awesome. That's how it should be. Yeah.
It's very, very reassuring as a property owner, because if somebody isn't paying for their cell phone service, they don't get to keep using their cell phone for free, for example.
Yeah. That's not the case here. They can use their cell phone for almost a year here for free.
Oh gosh.
Yeah.
Well, maybe a bad example.
No, I don't mean the cell phone. I'm referring to tenants living in the property.
Right. Yeah.
Yeah. It was a metaphor.
I've heard a lot of horror stories. Yeah. Sorry, I wasn't following it first, but yeah, no, I've heard that horror stories out of Ontario where you just have a tenants living for free for, and then once you finally do get them out, it's almost impossible to collect, which is a real tragedy. I mean, it's discouraging as a landlord to know that you are at that risk. So that's one of the reassuring things about doing business in Alberta is if you've got a tenant that is refusing to pay rent, then you're not obligated to let them stay for free. You can get through the process very quickly.
Sure. Yeah. Obviously, the benefits of investing in the GTA in the Greater Toronto Area is the fact that we have appreciation, and in some markets we have a combination of cash flow as well. So we do get to experience those things, but there are some cons as well. And obviously Edmonton has some pros there. So it's just a matter of preference. Like what's your risk tolerance? What do you prefer, cash flow or appreciation or whatever? And I guess you got to make a decision based on these things.
Yeah. And, I think I'm a big proponent of diversity in your wealth plan. I know there are definitely some people out there who say it pays to be a specialist, and the advice is buy just properties of one type in one neighborhood so that it's efficient. But I'm personally a believer in diversity, so I think it does make sense to have different properties in different places.
Yep.
I think it makes sense to not just be in real estate, but to also have other financial instruments available. The more eggs you have in the basket, the safer the basket is.
Sure.
So
yeah. Are you investing in other things as well? Like, I don't know if you do stocks or if you just do anything else that you've invested in.
Yeah, I mean, I do the old school stuff, like just I like being efficient with taxes, so I max out my RRSP every year. I max out my TFSA every year. I have several life insurance policies because the growth in there is tax deferred as well. And I mean, that's just like a monthly little bit that it just kind of goes out of the bank account. Like it just goes. You don't even notice it.
Yeah.
I have invested in a couple of kind of startup businesses, just friends and colleagues who have interesting business ideas, stuff like that. And then in my RSP and TFSA, I mix it around a little bit. Like, I don't know a darn thing about the stock market, so it's mostly EFTs and index funds, as opposed to, like trying to day trade penny stocks. Like, I might as well be gambling at that point. So sure. I like index funds because it allows me to put money into markets that I believe in, but it spreads it over all the companies that are playing in that industry.
For sure. Okay, cool. I guess the last thing I'll ask you here before we move on is, I'm just curious, have you seen rents in your market come down at all in the last 10 years?
The Edmonton market?
Yes.
Absolutely, yeah. I mean, the Edmonton market is a boom and bust economy because it does still trend with the global oil markets, which are boom and bust. So We had a market peak in 2007 and 8, followed by a period of recession. We had a market peak in late 2014, early 2015. That has been followed by kind of a recessionary period that we're just starting to come out of. So, it is kind of looking pretty good for things actually going through another growth period here in Edmonton. So there's a lot of optimism for that. And if we follow historical trends, typically it's every 7 to 9 years Edmonton has a boom cycle. So, just by that cycle, we are kind of due for a period of growth.
Yeah, for sure. Cool. I think you've sold Edmonton pretty well. It seems like there's a lot of upside to going there. Obviously, it's not for everyone, but there will be some people that hopefully are listening to this and will open their minds to the idea of investing outside of where they live. I wanted to go into the next section, which is the random 5. Okay, so I'm going to ask you 5 random questions, and you
Let's
just tell me.
random.
Yeah, you just tell me the first thing that comes to mind.
Sure.
What talent would you show off in a talent show?
I'm a pretty darn good skier. So if there was a way to get a ski hill into the talent show auditorium, that would be a talent I'd probably show off for sure.
Awesome. Yeah, I'm actually going to go skiing this week for the first time in a while. So I'm really looking forward to that.
Oh, man. Get out there, get the fresh air, and get some speed in. It's good for you.
Yeah, exactly. Second question, pizza or tacos?
Wow. You know what? I think I would probably say tacos, but I do have a soft spot for pizza. They're both great foods.
Yeah, they are.
But I've been on a big fish tacos kick lately, so I'd say right now it's got to be the fish tacos.
Yeah.
I like them when they're battered with a little bit of spicy aioli in there.
Nice. Yeah, that's awesome. I don't know if you've ever been to like California or Mexico or something like that, but yeah, tacos are awesome out there.
Yeah.
All right. Number 3, what was your best birthday?
Oh boy. I've had a lot of, I go pretty hard on my birthday. So there's a lot of them in there, I like to treat myself, and I like to go for a big event. I'd say probably, and my birthday, have you ever heard of the music festival Coachella?
Yeah.
Yeah, so my birthday falls during the week that Coachella Music Festival happens.
Cool.
So I've gone to Coachella several times for my birthday, and that's always a pretty epic event. And then there are a couple of times where my birthday was in the middle of the 2 weekends. So we went to weekend 1, celebrated my birthday week, went to weekend 2, which is
nice.
It's pretty good. So I mean, hopefully those days come back soon. COVID, I think we've all had enough COVID, and I'm ready for a good music festival again.
Oh yeah, for sure. Isn't Coachella? Doesn't it happen in California?
It does, yeah. It's in a town called Indio, which is like a suburb of Palm Springs.
Oh yeah, there you go. So I'm sure you've had tacos down there when you've been.
Oh, you bet. Yeah, lots of tacos in Cali.
Nice. Okay, number 4. What would you do on a free afternoon in the middle of the week?
Well, so right now, go skiing. And I always keep an eye on the app, and if the powder is dumping down, then chances are I might sneak away from the office to get a few turns in.
Cool. Yeah, that's awesome. I'm sure you guys have some nice hills out in Edmonton, or I don't know if you go outside of Edmonton.
Well, I'm in our Vancouver office right now, and Whistler, which was the site of the 2010 Olympics, is about an hour and 30-minute drive away. So
cool.
That's it's convenient, and for anybody listening who knows anything about Whistler, it is one of the premier ski hills on the planet. So it's a real treat to have it this close by.
Oh yeah, for sure. I've got some friends that have actually flown out to go down Whistler. I think they had to take a helicopter to get to the top or something like that.
They might have gone heli skiing. Whistler does have a lot of different heli skiing peaks. But in resort, you don't need to take a helicopter. But if they're going heli skiing, then it sounds like your friends are pretty darn good skiers. So that's pretty dope.
Yeah. Okay, and the last question: what success principle do you live by?
I would say consistency. Consistency is one of the most important things. So many times people start something, don't get instant results, get frustrated and quit before they even give whatever it is they're trying to do enough time to take hold. So I'm a huge advocate of just consistently doing the right things for a focused duration of time. Mm-hmm. And that applies to anything, whether you're trying to get in shape or trying to start a sales pipeline in a new career. You got to be consistent with working a system.
Oh yeah, for sure. Yeah, that's great. Great advice. And I appreciate you sharing your stories. So to finish things off, how do people reach you and what services do you provide?
Yeah, you betcha. So an easy way to get a hold of us would be to visit our website, www.mogulrg.com. That's MOGULRG.com.
Yep.
Me directly, just email me, james@mogulrg.com, MOGULRG.com, and reach out to talk about, if you're interested in a career in real estate, especially if you're in the Western Canadian market. We have new realtors joining our team all the time, and we love having real estate conversations with people that want to be realtors. If you're an experienced realtor, chances are there's a great opportunity for you on our team as well. And if you're an investor and you're interested in that cash flow conversation, Edmonton's a great place to diversify your portfolio and add a bit of really stable cash flowing property. So reach out to us to talk about that. And, if you're out in Vancouver, we love working with Vancouver properties, whether it's pre-sales or even just, homeowners and sellers. So, we've got a lot going on, and we're just happy to talk to people about real estate.
Cool. Awesome. James, thanks so much. I appreciate your time. And we'll talk again soon.
Yeah, man, it's my pleasure. Thanks for having me on. It's a great conversation, and it's just about lunchtime out here on the coast, so I think I might actually go get myself some fish tacos.
Nice. All right. Sounds good. Okay. Enjoy your fish tacos and have a great day.
Thanks.
Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.